Hello and welcome. Today, we are diving deep into the Southern Ontario real estate market for September 2025. We're going to cover the GTA, Hamilton, and Waterloo to give you the complete, unvarnished picture of what's really going on. So let's just cut right to the chase. It's the one question on everybody's mind. After a year that's been, let's be honest, a total roller coaster, is now the right time to finally make a move? The answer, well, it might not be what you think. You know, if I had to sum up September 2025 in just one phrase, it would be cautious optimism. A recent interest rate cut was basically the green light that buyers and sellers were waiting for to get off the sidelines. It's kind of like the market just woke up from a really long nap. It's stretching, getting its bearings, but it's definitely not ready to sprint just yet. So here's how we're going to break it all down. First, we'll start with that 30,000-foot view. Then we're going to zoom right in on three very different regions. After that, we'll get into the growing divide between houses and condos, figure out the why behind all these numbers, and then we'll wrap up with a little look ahead. All right, first up, the big picture. The key theme this month, really, is a shifting balance. Those wild, unpredictable swings we saw over the past year, they seem to be giving way to something a lot more stable. Right now, the Greater Toronto Area is officially in what the experts call a balanced market. So what on earth does that actually mean for you? Well, it means that for the first time in what feels like forever, neither buyers nor sellers really have the upper hand. It's a market where negotiation is back and strategy actually matters again. Now, this is where things get really interesting. If you look at the short term, month over month, prices are slowly but surely creeping up. That's a great sign of recovery. But if you compare it to this time last year, we're still a little bit behind. The big takeaway here, the market is definitely healing, but you can still see the scars from the last 12 months. But here's the thing, that big picture doesn't tell the whole story, not even close. On the ground, Toronto, Hamilton, and Waterloo are three completely different worlds right now. So let's get into the weeds. Okay, first stop, the big one, Toronto. As the region's economic hub, what happens here tends to ripple out everywhere else. And here's the headline number for the city. An average home price just over $1.1 million. Now, what's really telling is that it's up 1.2% from just last month, a pretty clear signal that demand in the core is starting to heat up again. And it's not just about the price tag. The number of sales jumped by a healthy 6%. This isn't just about investors returning. This is being driven by families, especially in areas like Scarborough and York, where you can still find relatively good value. All right, now let's hop on the QEW and head down to Hamilton, Burlington, where the market looks totally different. If you're someone who's looking for value, this is where the story gets really interesting. The average price here is just over $762,000. And get this, it actually dipped a little bit from last month. That's a huge sign that conditions are softer and definitely more friendly for buyers. So yeah, this just confirms it. It's a buyer-friendly market out there. Prices are down almost 3% compared to last year. If you're looking for some negotiating power, especially for a condo downtown, Hamilton is absolutely the place to be right now. And for our third stop, we've got the Waterloo region, which is continuing its story as a major growth hub. It's attracting everybody from tech workers to new immigrants. In Waterloo, the average price is sitting just under $750,000. And while prices did dip a tiny bit, sales activity is still incredibly strong. In fact, sales jumped a solid 4.4% in September. Now, even though prices are down 3.5% year over year, most people see this as a good thing, a return to affordability, not a sign of weakness. Hotspots like Kitchener East and Cambridge are buzzing because of stable inventory and great value. Okay, here is the full data dump across all the major regions. We'll just read this up for a second, so go ahead and hit pause if you want to find the exact numbers for your neighborhood. You know, it's not just about where you buy anymore, it's about what you buy. And in September, we saw this massive gap open up between how detached homes are performing versus how condos are doing. It's a huge divide. Wow, just look at this chart. It pretty much says it all, doesn't it? In just 1 month, detached home prices jumped 1.6%. Condos, on the other hand, almost completely flat. We are literally talking about two separate markets operating in the exact same city. So what is going on here? Why the huge gap? Well, it's a classic case of supply and demand. For detached homes, there just aren't enough to go around for all the families who want one, and that pushes prices up. For condos, you've got a ton of units on the market, and investors, who are a huge part of that segment, have gotten really, really cautious. Okay, so we've covered the what and the where, but what about the why? Let's pull back the curtain a little and look at the major forces that are shaping this entire market. It really boils down to three key ingredients in this market stew. First, that interest rate cut basically opened the floodgates of pent-up demand. Second, strong immigration continues to fuel the need for housing, especially in more affordable areas. And third, a nice rise in new listings is adding just enough supply to keep prices from completely spiraling out of control. And all of this leads to the question you're probably asking right now. In this kind of market, where can I actually find a deal? I mean, where are prices really dropping? Well, the data gives us a very clear answer on this one. The biggest year-over-year drops, and therefore probably the best opportunities for buyers, were clustered in two main pockets: condos, right in central Hamilton, and some of the entry-level detached homes in certain parts of the Waterloo region. So that's the lay of the land right now. To wrap things up, let's pull out the crystal ball and take a peek at what the rest of 2025 might have in store for us. I think the main takeaway here is expect these balanced conditions to stick around. No huge, dramatic swings seem to be on the horizon. We'll probably see some modest price gains in places like Halton, while Hamilton and Waterloo should stay pretty steady. And that super strong demand for detached and semi-detached homes, yeah, that's not going anywhere anytime soon. So here we are. We're left with a market that's finally moved beyond the extremes. It's a market of negotiation, of regional differences, and of careful optimism. It offers real opportunities for buyers and some much-needed stability for sellers. The only question left is, in this new, balanced market, what's your next move?